Show me the crypto. Show me the crypto. Show me the crypto.
In a world on the brink of disruption, two men will bring you clarity by interviewing some of the most intelligent and influential names in the blockchain world. Welcome to Show Me the Crypto with your hosts, Wade Patterson and Ulf Lonergan.
Well, hi there, and welcome to Show Me the Crypto. My name's Wade Patterson.
And I'm Ulf Lonergan.
We're a couple of friends from Canada who love learning about cryptocurrencies and blockchain technology, and we're happy you're along for the ride. Whether you're a crypto virgin or you know your way around the block, we hope our interviews with some of the most intelligent and influential people in the blockchain space help deliver you with value. And on this episode, we're joined by Joshua Frank, co-founder and CEO of The Tie, a crypto-focused data company that analyzes social media and news sources to create sentiment analysis. As Joshua became increasingly interested in the digital asset space, he continued to come across what he described as a lack of trusted and transparent data and technology. So he left his job at SS&C to build The Tie full-time in March 2018. Today, The Tie is a team of 15 looking to grow to more than 40 in the next 12 months. Joshua was also ranked number 69 on Cointelegraph's top 100 for 2021. Joshua, welcome to Show Me the Crypto.
Wow, I've never had like a full introduction before. It's kind of weird to hear somebody talk about you. So yeah, I don't understand. Thank you for having me. It's great to chat with you guys. Excited to be on.
We're really excited really excited to have you as well. And so that was a lengthy bio, but it didn't touch on the specifics of how you first discovered crypto and what your initial impression was. Do you mind walking our audience through that?
Yeah, sure. So, I guess my first memory of Bitcoin was probably 2013 or 2014. One of my co-founders was doing short-term Bitcoin loans on Bitfinex back in the day for 100% interest, annual interest, and it seemed scammy to me. And so, fast forward 3 years, it was 2017. And the market started to get really crazy. This is probably, early 2017. Bitcoin was at $2,000, something like that. Was super bored at my day job at SS&C. And so started day trading crypto. And that's kind of my first foray into the space. And that's kind of what led into, building The Tie.
Nice. And for our audience who doesn't know, and for our own sake, can you explain what The Tie is? And who are some of the clients of The Tie, and what do you provide them? And just get into that a little bit for us.
Yeah, so that actually ties really well into the last question, which is how did I discover crypto? How did I get in? So as I was super bored at my day job, I was working in post-trade settlement technology, which don't even Google it. It's more boring than it sounds. It's so boring. It's so dreadful. There's nothing. But so I was basically looking at, crypto. I was day trading crypto. And at the same time, I was using sentiment data or the wisdom of the crowd investor emotion data to build quantitative models to predict movement of stocks. And kind of put two and two together. I was like, wait, if I can use sentiment data as part of a model to predict the movement of a stock, well, why can't I do the same thing for crypto? And unlike a stock, crypto doesn't have fundamentals, right? A stock still has, it's a company, it makes money. Back in 2017, sure, maybe you can argue with DeFi now, some of these tokens have some quote unquote fundamentals. But broadly speaking, cryptocurrencies don't have earnings, they don't have revenue, they don't have dividends. And so I was like, okay, in the land of the blind, the one-eyed man is king, right? If I can have this sentiment data, if I can see a little bit into the market, that's a lot more than anybody else. And so I had a relationship with a company called SMA Social Market Analytics, and they're the leading provider of sentiment data in traditional financial markets. They provide sentiment data over the last decade on equities, future, Forex, fixed income. And so I called up the CEO, Joe, and I said, hey, Joe, I think there's a giant opportunity in crypto. Let's set up an entirely new company to service this digital asset space. And that's kind of the background, how we got started on The Tie. And we brought over, 10 years of technology from traditional finance. We brought over the only partnership that exists with Twitter to this day in crypto. So we're an official Twitter partner with access to the full feed of 1 billion tweets a day directly from Twitter. And so, kind of went all in early 2018. And as we got started in this space, I started calling up crypto funds and very quickly realized that they weren't actually funds, especially back in early 2018. Like the clients that SMA had serviced in equity markets were $50-60 billion quantitative hedge funds that had teams of 800 data scientists and researchers that could ingest sentiment data and could build models around that data alongside other information. And, a crypto fund back in 2018 was two guys who made $4 million on the Ethereum ICO and thought they knew what they were doing. And so, but we decided to kind of stick it out, right, and stay in the space. And as we got deeper and deeper, the thing that we realized is, screw sentiment. No one knew what was going on in crypto. Like I was going and I was talking to hedge funds and I was like, how are you guys staying on top of the 30 assets that you're trading? And they're like, we subscribe to 372 newsletters. We have an analyst who spends 60 hours a week on Twitter. We're sitting in 4 million Telegram groups, right? We go to these 68 websites every single day. And I was like, that just doesn't make any sense. Like I was used to, sure, I've been on Bloomberg and FactSet and all those platforms, but you could go on Yahoo Finance and you could see news on a company. Like, I don't know why that's such a revolutionary concept. Yet in crypto, it really didn't exist. And so we spent 2 years basically building technology to go out and crawl from over 7,500 sources in real time. So our technology parses through every SEC filing, every court case, every regulatory ruling in 3,500 different global regulatory bodies, every update from tokens, so their mediums, their blogs, their forums, every update from news sources in China, here, there. I mean, you name it. We're tracking 7,500 sources in 100 different languages. What our technology does is basically able to bring in all that information and tag and categorize it in real time. So you can say, for example, show me anytime an asset that I'm trading gets hacked, or let me know anytime there's a company receives a BIT license, which is like the New York Department of Financial Services regulatory requirement to do business as like a crypto exchange in New York. And so we built that primarily for hedge funds, but have found a lot of other use cases. And so we actually power all of the breaking news of the two biggest crypto publications. They're both clients of ours. Their entire staff sit on our software all day, and they're looking for news to break. And so we kind of have two core lines of business. The first is we have like the most powerful business to business enterprise data platform in crypto, which we continue to add to, which focuses on news and investor sentiment. And that's used by hedge funds, market makers, OTC desks, publications, sell-side researchers, law firms, exchanges, mining companies, you name it. And then we have another business, which is actually we do a lot of B2B2C, where we behind the scenes will license data into different platforms, or actually license entire platforms to other companies, and they'll go out and sell those platforms with their name on it.
And so a lot of the data that you're collecting, is this kind of like holistic of like the entire crypto market, or is it getting really individual with like each specific coin? And if so, like how is that covering every single, because there's thousands, right, of different cryptocurrencies?
So we get granular. The value, if I just gave you a feed of every news story we picked up, you'd see a feed of 20,000 news stories a day. That's not helpful. Yeah. And we track 1 billion tweets. And so getting a feed of that is not going to be helpful. And so, so we spec on a per coin basis. For sentiment, we track 750 assets. For real-time market moving news, we track, I think, 196 last I checked. And it's all on a per requested basis by institutions.
And for someone like myself, I mean, I understand a lot of the premise of what you've explained, but how do you actually you collect all this data and then turn it into meaningful sentiment? Like, is it just extracting certain words that then give you an idea of if people are generally speaking positively about something or negatively? Can you maybe explain a bit of how that technology actually works?
Yeah, and so we have two core things, right? We have the news and sentiment, and they're actually separate products. We combine them together in a few different ways. But in terms of investor sentiment, the way that it actually works is, so we ingest 1 billion tweets a day from Twitter. And the first thing that we have to do is actually determine whether or not that tweet is relevant to any individual asset. And that may sound easy at first, but it's actually incredibly difficult. Because if you think of NEO, you may think NEO, the cryptocurrency NEO. Well, NEO is also a stock exchange in Canada. And so financial tweets mentioning NEO can be about the stock exchange in Canada. Ethereum, ETH is Ethan Allen, the American home furniture company. It's Ethereum, the cryptocurrency, and ether glycol is a gas. And so we actually have to build, it's a combination of both, human-built modeling, but also, natural language processing, neural network training, AI, right? Where we're training models to basically be able to pick up and identify whether or not a tweet is actually relevant to an individual asset. And so once we've done that, though, the next step is actually filtering out tweets. And so I'm sure you guys have seen like a lot of tweets on Twitter probably appear to be from not real accounts. And that's because they are. We estimate, on some assets up to 90 or 95% of tweets are actually from bots.
Wow.
And so we've built a proprietary 13-step process for trying to clean out accounts. So we look at the follower to follows ratio of the account, the length of time it's been around for, its history. So if an account just posts about XRP, we're not going to score it for XRP. We look at how many assets are being mentioned in a tweet. So if somebody's like, I'm bullish on Bitcoin, Cardano, Ethereum, Litecoin, whatever, we throw it out. And so we basically, start with, let's say, 200,000 tweets on an asset. We may whittle that down to 10,000 after we've gotten through all the bots and the spam. And then we've actually, over the last decade, this was done by SMA, and we've added to it with the crypto dictionary, built a dictionary of over 100,000 unique terms. And we actually score every single word in every single tweet individually. So for example, if we see a tweet that Bitcoin to see surge in OTC trading volume after ETF is approved in the US, we'll score the word surge and approved positively. And we actually score, the value of the individual tweet. And what we'll then do is we'll look at how positive or negative, our tweets over one period of time versus a look back period. So as an example, our core metric looks at how positive or negative are investors on an asset over the last day versus the previous 20 days. And the reason that we do that is we want to normalize the data on an asset versus itself, right? I don't care how positive Bitcoin is versus Ethereum if we know that Ethereum is always more positive than Bitcoin, right? Mm-hmm. If you're trying to build models to predict price movement, what you care about is, hey, is Bitcoin sentiment, 90% more positive than it normally is? And so we produce about 50 proprietary data points, and that we service via front end, via API in different ways to our clients to kind of understand and analyze investor motion. But the thing which is even more interesting is that positive sentiment doesn't mean positive price movement. Oftentimes, it's a lot more complicated of a relationship than that. And so, we have a team of data scientists as well on top of, our technology team that tries to make sense of all of this data. And generally speaking, yes, building up positive sentiment over periods of time, growing your conversation is a good thing, right? You obviously don't want your conversation to go down, and you don't want people to be negative. But that said, there's just these very complex interrelationships between all these different variables like price movement, volatility, trading volumes, sentiment, and all these different things. And so what we do for clients is not just give them access to data on the front end, but we actually build out, algorithms, models, and different ways to understand these complex interrelationships between variables so that they can make more effective data-driven decisions.
And you mentioned there news versus sentiment. For someone like myself who's not sure what the difference is, do they not correlate, and are they not related? Positive news equals positive sentiment, or is that not necessarily the case?
So sentiment is usually a response to news, not always. And so with our news product, it's actually focused on going to primary sources like the New York Department of Financial Services press releases and finding that PayPal received a bit license before so we picked up news of PayPal receiving an NYDFS bit license 40 minutes before Reuters broke that news story. And so we're able to deliver that information to our clients faster than anybody else. So that they can action on that before there's even a reaction. So we can both deliver news in real time. I mean, we're scraping websites as fast as every 3 seconds. We actually have 40 computers that are basically online, or servers that are concurrently rotating IP addresses. And they're basically trying to, we can use this computer on second, 1479. We can use this computer on second 25, whatever, so that we can constantly ping these sites and be notified of things in real time. And so, with our news product, it's focused on either delivering news desk stories as fast as possible. They can actually go out and write those stories. It's focused on helping hedge funds stay on top of information in real time. We actually have some partners where we'll license data, and those actually will go to retail, folks on the front end. And we're public about that. You can Google, some of our partners. And so, there's really two separate things, right? There's the real-time news, and we're actually working on some really cool shit, which I'm happy to get into around real-time news. And then sentiment, which is kind of the reaction to that, but they're related, right? And so when we're building models, we'll take into account both.
And so using something that everybody's going to be familiar with that was relatively recent here, let's talk about Tesla and Elon Musk announcing that Tesla was going to put some of their company reserves into Bitcoin, and they bought Bitcoin. That was like a real newsworthy moment that probably resulted in a lot of positive sentiment. We saw recently after that there was quite a spike in the Bitcoin price. Is that something that for your company could have been identified, was possibly identified, and for your clients, gave them the information that, hey, this type of news could lead to a big move in the Bitcoin price? And did that create a buying opportunity for them based on that information?
Yeah, so we actually track. We actually have technology that reads through every single word of every SEC filing, and so we can track and we can look for the word Bitcoin in a filing, Ethereum, Litecoin, cryptocurrency, security token, whatever it is. And so we're actively parsing through every SEC filing, and Tesla, as an example, showed up in our feed. Where we're able to, both identify things, every single thing. So there's plenty of filings that you guys haven't seen where big public companies have talked about crypto that just don't get picked up because not everyone gets picked up. We also do other cool things. So for example, we track the CIK, which is basically like the indicator or the unique identifier of every crypto hedge fund. And we're actively tracking every single time those hedge funds raise new capital. So for example, if Pantera raises $420 million for a new Bitcoin fund or for a new DeFi fund or for a new NFT fund, we can pick that information up, effectively in real time. I mean, we now have, access to the full SEC API. And so we're able to, going forward, we're going to be, tracking things hopefully as fast as every minute from the SEC.
From a point of like scoring yourself and how well you're doing and that kind of thing, I mean, the news side makes sense. That's pretty straightforward. But in terms of price movement, like you said, it doesn't always, positive sentiment doesn't always equate to like I said, there could be euphoria in the market, but that doesn't mean that necessarily the price is going to keep going up. How do you guys grade yourselves to know whether, tweaks need to be made to certain things, or do you have those performance records kind of over the last year?
So I mean, part of what we do is obviously helping people trade, but that's actually not our core business. I mean, that's part of it, but it's not. I mean, our business with hedge funds is less than 10% of our revenue.
Right.
So we have a lot of other things that we're doing. My goal across all my business, all of the lines of business, everything that we do is to help people make smarter, data-driven decisions. So an example of that is we're actually working with some token issuers, and just like we can help hedge funds understand what's driving the value of an asset, on the other side of the token, for lack of better words, a token issuer wants to know, hey, why is X coin doing better than mine, or why is their community growing larger? And we're able to do all sorts of analysis around, for example, what days of the week do announcements have the biggest impact on the growth of your community, or on X or on Y or of Z? How many days before an announcement is optimal, right? Like, is Justin Sun's announcement of an announcement strategy for Tron actually a good one? Which exchanges have the biggest impact on price, and in which order? Because it's actually really interesting. For example, you might think that Coinbase has the biggest impact in price, which it does. The average Coinbase listing moves price by about 50.4% from the time it's announced to the time it's actually listed. But there's actually some exchanges that are much better if you list after Coinbase than before. And so we're able to help token issuers use a lot of the same data to understand how do you make better decisions. With funds, my goal is to provide the highest quality data possible so that they can make their own decisions. We're not telling anybody what to do. We are an unbiased data provider. And so my goal is to make my data as clean as possible. So when we're scoring sentiment, when we're tracking news, anything else, we want to make sure that our models are good. So I'm not picking up sentiment on Ethan Allen, right? And I want to make sure that, the data quality is clean so that these folks can take them into whatever models or whatever proprietary things that they're doing and make more informed, better decisions.
You just mentioned token issuers, you mentioned funds. What are your other types of primary clients and audiences who would utilize the TIE and the services you provide?
Yeah, it's a mix. I mean, we have some law firms that use us, and law firms are actually, some of them are defending token issuers, and they're trying to argue that their token issuers are not manipulating price. And because we have all this news data, all this sentiment data, we can do really cool overlays to help them actually defend their clients. We're working with research firms. We're working with market makers, for example, so guys that are actually, providing liquidity for tokens on exchanges. And so sometimes market makers want to use us for just business development as an example, where they want to identify which tokens are starting to pick up steam on Twitter so they can go reach out. And we do a lot of business with individual investors as well through a lot of the licensing of our data that we do. We have a relationship, as an example, with eToro, where we provide trading strategies on the eToro platform that U.S. investors can copy. We're doing further deeper integrations on the data side with them, but across all of our platforms, we service, tens of thousands of paying retail customers in addition to institutional customers.
How much of an impact percentage-wise does, I don't know about percentage-wise, but how much of an impact does, there's a lot of really popular crypto YouTubers and that kind of thing.
Giant.
I was going to ask about them.
Super underrated how big of an impact that YouTube has on the crypto market. And I think a lot of institutions really miss that. I'll get a call from a hedge fund manager who's like, why did Cardano move? I'm like, go on YouTube and type in crypto. Every video is Cardano. I think oftentimes, I think the thing that we need to keep in mind is that you really have two separate things, right? You have Bitcoin and you have crypto. And in my mind, those are totally different concepts at this point, right? Bitcoin has become this macro asset, this institutionally driven asset, right? Where people are looking at the US government printing trillions and trillions of dollars, and they're now putting their dollars into Bitcoin and they're holding them as a store of value for the most part, right? That's totally separate from the rest of crypto. The rest of crypto is retail. It is primarily retail driven. It is driven by the individual investor, which I think is awesome, and it's speculative, right? You talked about like a Manulife or a big pension or a big endowment. These guys are not going to buy your bags of Litecoin, right? They're not. They're buying Bitcoin and they're holding it. And when it comes to the rest of the market, I mean, sure, you have crypto native hedge funds, but it's primarily retail driven. And you can see that the power of that. I mean, there's so many YouTubers. There's, the BitBoy crypto guy. There's Digital Asset News. There's Ivan on Tech. These guys have massive followings. And when they talk about an asset for 500,000 people and the asset's only trades at $5 million a day, what do you think is going to happen, right? It's going to go up. So, there's certainly a relationship. And we're actually, we're working on trying to get some YouTube data to predict price movement as well.
I know that this isn't necessarily your responsibility on the side of it, but I'm just, as a side note, wondering what your thoughts are on the ethics of this type of thing, because when you start to think about stocks maybe being different from crypto and like a lot of the getting away from insider information, that kind of thing, but then for some of these crypto YouTubers who and don't want to throw anyone under the bus because everyone's different.
These guys are getting paid to pump coins 100%. I mean, that's
so what are your thoughts then on the ethics of it? And
I think it's clearly it's not, necessarily the greatest thing. I mean, there's a rumor, and I can't confirm whether or not this is true, but there was Saffron Finance came out and a lot of large investors invested in it. And I don't know if anybody saw Logan Paul tweeted about it. And then Saffron Finance crashed from $2,800 to $2,200 the other day after all these big investors announced they were part of it. The rumor, which I've heard, is that Logan Paul just got Saffron Finance and then dumped it on the market. When I can't confirm that. I've never spoken to him. I don't know his wallet address. Like, I haven't really looked at Saffron's, on-chain data. Yeah. But, I mean, look, certainly there's shit going on in this market, right? I mean, it's just, look, at the end of the day, everybody wants their bags to go up, right? Whether you're a YouTuber, whether you're an individual. I mean, individuals doing the same thing. They just don't have the same reach that a YouTuber has. So.
Ulf, do you realize that our audience has either been watching or listening to this episode for 20 minutes?
20 minutes? They should probably subscribe.
Yeah, they should subscribe, and they should like and comment and hit that notifications bell.
Oh, and did you tell them about the NFTs?
That's right. We have our own NFT for our OG supporters. This is a way you can support our show, help us bring you continual great content. Information on that is below.
So, what, on the topic of YouTubers and maybe just retail and individuals, are there everyday traders who utilize your service to help them out, or is that kind of not really your your target market, and or is your service pricing too expensive for the everyday trader?
So we don't do business directly with individuals. Our enterprise, products are outside of the budget of an individual.
Right.
We license, as mentioned before, a tremendous amount of data to different platforms in the space. And you can Google some of them. I don't want to pick favorites, but there are a number of more than a handful of platforms that are actually primarily driven by our data, where their entire platforms for individual investors are powered by us. It's all our data, all our technology, where we're licensing that information. We have other, I can give you an example of like a small thing, like Coin Metro, which is an Estonian crypto exchange. You can go on their website. They have some of our sentiment data on their website. There's Nuggets News in Australia. So speaking of big crypto YouTubers, are integrating a lot of our news feeds into their platform. And so what we let a lot of different, platforms that service retail customers do is, we'll let them come onto our institutional platform and be like, look, here's the buffet, right? Pick 2 entrees off of the buffet, right? And then we can integrate that into your platform. And so we don't service any individual investors directly. It's all through partnerships with other companies in the space.
I gotcha. And in regards to competitors, I mean, you mentioned when you first were getting into this and started the TIE that basically no one was doing this. Yeah. Is there now a lot of competition in the space for you?
Across different things. I mean, we do a lot, right? We're now actually closer to 20. I think you mentioned 15 at the beginning. We're growing really fast, and so we do a lot of different things. Token consulting certainly has some competitors, which are different than selling sentiment data, which are different than licensing news feeds. And so, look, across different lines of businesses, we compete with different folks, but at this point, we're not concerned about competition. We think this market is ginormous and it's growing, and no one is capturing it. And so, I look at the addressable market on a lot of what we're doing in the billions of dollars a year. And there's no crypto data company that's making billions of dollars a year yet.
And what about, you had mentioned something about live news, I believe, and that's something, a new feature that you guys are building out.
Oh, so we're doing some cool things with news, not live news, but one of the coolest things that we're doing, and one of the biggest challenges that our clients had, is when a news story breaks, the biggest challenge is knowing, was this announced before? So for example, if whatever asset announces a mainnet upgrade, or they put out a blog post referencing a mainnet upgrade, you want to know, was this mentioned before? And so we've built this really cool technology that can do a few things. The first is we've actually built machine learning technology that can automatically open a news story, read through the entire news story, and automatically detect an event and a date. So we can build out automatic event calendars. So for example, X coin is going to be launching on Binance Launchpad on March 27th. We can throw that in a calendar automatically. But on top of that, we built similarity algorithms that can basically parse through news stories, can tell you if this has ever been mentioned before, if this is the first mention of it. So when you, on our platform, when you go to click into a news story, you'll be able to see a calendared event. Like, is this an upcoming event? Was this mentioned before? And what is the predicted impact on the market based off of similar events in the past? So within 2 seconds of a news story coming out, I can tell you, this is likely a high impact event. Here's 5 similar news stories that happened in the past. This has never been mentioned before around this coin, and X and Y and Z. So just giving, unparalleled insight into, real time, actionable information in the space.
Could your technology ever be used to track a specific NFT or like that type of thing, like various assets from that? Like you mentioned, you're following various projects, but NFTs are getting a ton of hype right now and that kind of thing. Could you somehow use this technology to, like, I don't know, understand the value of if a Beeple is going to go up in value or down, that type of thing?
We haven't really tried, so I couldn't really comment on that. We're doing a lot of cool stuff in DeFi, which is separate from our sentiment and news technology. But we haven't really gotten too involved with NFTs. The extent of our involvement in NFTs is tracking, projects like, Rarible and Chili's and Rally and different assets like that.
What about on-chain data and how that is different from, the sentiment data you gather from through APIs or through scraping, the internet? Is a lot of what you provide also through on-chain?
So we don't touch on-chain data at this point. We are running a couple nodes on blockchains, but on-chain data, for anybody listening who doesn't know, is transactional data on a blockchain, right? So the thing about a blockchain is it's an open transactional ledger, right? Where you can see that money went from account A to account B. And because of that, because it's this open ledger, you can see, the flows of money, right? You can see if money is flowing into an exchange. You can see if a fund, if their address is moving money around. You can see how much supply is actively on exchanges. And so there's lots of really interesting things that you can do around on-chain data. The reason we haven't focused on on-chain data to this point is because I think it's commoditized. The really cool thing about what we have is we have 3.5 years of out-of-sample data. You can't go up and make up 3.5 years of tweets. We're the only company that has those. And in data science, data history is the most important thing. And we have that with on-chain data. You can spin up a Bitcoin node and you can get the full history of Bitcoin transactional data right on day one. So it's very difficult to get a competitive advantage on-chain data. You can get a competitive advantage on branding. And so, certainly on-chain data is something we're actively considering, whether it's something we want to do ourselves, something we want to license from another company. I'm not sure yet. We're running Ethereum nodes, but primarily for DeFi purposes. To look at different yield farms, looking at different APRs on yield farms and things like that. But on-chain data is definitely interesting to me. I mean, in my head, I think of kind of 4 key pieces of data that you can have in crypto. Sentiment being one, news being the second, on-chain being the third, and market data, pricing data. Looking at volatility data, correlation data, reference rates, things like that is kind of the fourth. And so we focus on the first 2. We also do some pricing data, but it's not our core business. And on-chain is really exploratory at this point.
In the macro, there's a lot of people who have this belief in kind of a 4-year Bitcoin cycle of bull runs, bear runs, based around the Bitcoin halving event. Is what you're collecting, does it help kind of talk, or I guess solidify that theory at all, or does that come into it?
I mean, our clients are very short-term focused. Right. I don't touch price projections. I have no idea where Bitcoin's going. I couldn't tell you. Yeah. Anybody who tells you is full of shit because no one knows where Bitcoin's price is going. So no, we're not focused on anything long-term like that. I mean, certainly we can analyze it, but again, with the Bitcoin halving, you're looking at 4 data points, right? We're focused on looking at statistically significant samples of data, hundreds of thousands, millions, billions of data points to make a more informed opinion. With the halving, it happened 4 or 5 times so far. It's not like we have a very significant, sample of data to go off of.
I feel that in, being someone who's in the space, who follows the space, going back to even what Wade just mentioned as far as, the 4-year cycles and people who project what will happen based on data. That data usually seems to be either on-chain related or historically looking at charts and doing technical analysis. Why is it that we don't hear more about sentiment?
Not that many people have access to the data at the end of the day, right? It's, there's, as mentioned, we're the only company that has 3.5 years of historical Twitter data. And so, we're not, necessarily running out and talking about it all the time, but also it's alternative data, right? I mean, sentiment data is not, you look at traditional financial markets, sentiment data is bucketed into what's called alternative data, right? It's not a primary source of data. And again, positive sentiment doesn't necessarily mean positive price movement. It's a lot more complicated than that. And so, you look at Cointelegraph's website. I mean, we're quoted all the time, and in CoinDesk and Decrypt and The Block and all guys like that, talking about sentiment. But yeah, I mean, it's as mentioned, on-chain data is it's a lot easier to access. Mm-hmm. A lot more people are doing it. Which is why we're in this business. We think it's a lot harder to do.
Are there clients of yours that are, say, comparable to something like Glassnode, which is again on-chain data, but the reason someone would utilize Glassnode is to have the charts and the dashboards that are available to gain insights into, say, price movement? And I'm not saying that with sentiment, we're necessarily talking about price movement, but is there one of your clients who's built a similar dashboard who provides, insights into sentiment data thanks to the data you're providing them?
I mean, that's our core business, right? I mean, we have an institutional grade data terminal, which, does a lot more than a Glassnode would do. But that's, again, primarily services enterprise clients. We have, a couple of individuals. I mean, for transparency, I mean, pricing's in the tens of thousands of dollars a year to get access to that dashboard. We do have a couple individual clients that are, integrating sentiment data on their platforms, though. Yeah.
You have a really good quote, Joshua, that I came across, and he said, whether you're an institution looking for uncorrelated returns, a foreign worker looking to remit capital, or a degen trader looking to go 10,000x on a garbage token, crypto is ready for you. What do you mean by that?
Yeah, I mean, crypto is awesome. Like, it's the coolest industry to be in, right? I mean, Bitcoin, as mentioned before, is that uncorrelated asset, right? If you're nervous about, the fact that the US government just printed $2 trillion again, right? And just seemingly can print infinite dollars. Well, Bitcoin is this uncorrelated asset. It doesn't perform like the S&P. It doesn't perform like gold, right? And so you can put money in Bitcoin. From a foreign worker point of view, I mean, I think crypto is very, very exciting. And I think, stable coins in particular, especially if you can have stable coins, that are not on Ethereum, because Ethereum is just so expensive at this point. But the whole idea being, like, for example, I lived in Hong Kong growing up, and there are a very large number of Filipino foreign workers that work in Hong Kong. And if you look at the global average cost of remittance at a bank or a post office, it's between 7 and 11% to send money back home. And if you only have $200 a month to send back home, 11% of that is $22. I mean, that's a significant amount of money, right? But if you look at, for example, you look at Binance Smart Chain as an example, you can do a transaction. You can send BUSD on Binance Smart Chain in 3 seconds for 20 cents. Right. And if you're a foreign worker, that's amazing. Like, that's awesome that you can send capital home in real time at no cost. I mean, even today, to use a mobile app to remit capital, the average cost is 3%. I mean, it's tremendously expensive. You have billions, if not a trillion. It's probably, I think it's $750 billion to $1 trillion a year in foreign capital that's being remitted. Every single year. It's tremendous. I mean, think about all the Mexican migrant workers in the United States. I mean, you name it, right? Across the globe. And so I think crypto is incredibly, I love stable coins. I mean, I think there's so many really interesting use cases for them. Also, for example, being able to give somebody, certainly, obviously we can talk about the US dollar being inflated, but if you look at Pakistan, the inflation rate on the Pakistani rupee is 30%. And so having a US dollar, sure, the US dollar is going to inflate. It's not inflating 30%, right? I mean, you look at Venezuela, all these different countries, and if a US foreign worker is able to send, Binance USD or Tether or USDC or Gemini USD, and I'm not saying any specific stablecoin is better than any other one, back home, all of a sudden they have a more stable asset and they can get it for way cheaper. And then in terms of, degenerate, I mean, crypto is literally the best industry for degenerates. I mean, if you look at, what's performed well during COVID, it's all degenerate industries. I mean, think about it. It's alcohol, it's tobacco, it's gambling, and it's crypto, and it's meme stocks, right? I mean, at the end of the day, what is DeFi? DeFi is gambling, with the, trying to make it look fancy. I mean, what are you doing? I mean, you're taking money in a yield farm to yield another yield farm to yield another, like, it's like, it's like, oh, let me take, whatever asset, and let me, put it on Pancake Swap and a farm, and I'm going to take that asset and put in another farm somewhere else and another farm somewhere else. I mean, we talk about, decentralizing financial institutions. At the end of the day, I mean, a lot of these things are, effectively, I don't know if Ponzi schemes is the right word. I mean, I'm in on them. I'm having the best time ever, but like, it's definitely gambling.
I love that line. What is DeFi? It's gambling.
That's what it is.
It's so true, though, like, in so many ways.
I mean, what are NFTs? At this point, maybe they weren't gambling before. That paying $70 million for a piece of art is gambling or money laundering or both. Right. I mean, or just being a complete idiot who spends $70 million on a piece of digital art. Like, it just doesn't make any sense to me.
Yeah.
Joshua, this has been an awesome episode. Like Ulf said from the beginning, he and I are both pretty new to this space. You've done a great job just explaining everything, making it really easy to understand. But we like to end every episode of Show Me the Crypto with a 3-question segment called You Had Me at Crypto. So Ulf is going to ask you those questions.
All right. First question is, who is your favorite person to follow in the crypto space?
Who is my favorite person to follow in the crypto space? Oh man, putting me on the spot here. And I got lots of friends. He's gonna
gotta pick one.
You know what? This question catches people every time. They're like, "Oh man, I gotta pick one."
I think CMS, the hedge fund, actually has a really good Twitter. CMS Holdings, their Twitter is very entertaining. Sam Bankman-Fried is also very entertaining, so I'll give them both credit.
All right. Now, as I understand it, you're not a big fan of price predictions, which is totally fair. This is just for fun. What will the price of Bitcoin be 10 years from now?
I have no idea, but I'm not selling. The answer I always give is I'm holding Bitcoin. I haven't sold yet, and I'm not planning on selling anytime soon. So that's what I'll tell you what I'm doing with my own money, which I think is more important than any sort of price prediction.
Fair.
That's a fair answer.
And what's the most underrated coin or project in crypto?
Oh man. Are you trying to ask me to show my bags here? I got lots of bags to show.
We tell everyone, well, I guess in your case, you know what? Yes, it is bag showing. So there you go.
Yeah. I mean, I don't know. I mean, I got yeah, I don't know. I mean, I'm sitting on, I got into Goose Finance, which is a big mistake. So I don't know if anybody knows what Goose Finance is, but it is the equivalent of a Ponzi scheme for crypto. It is ridiculous. So I've gotten super down the Binance Smart Chain rabbit hole because I love that it's just cheaper and faster to do transactions than Ethereum. Like I'm also playing around with Solana and all these different protocols. But so Goose is a DeFi platform built on top of Binance Smart Chain, and they introduced this thing called layered farming, which is as much of a Ponzi scheme as it sounds. Basically, the main token is called Egg or Goose, and then every week they're releasing a new layer. So the first week was Golden Goose 1, second week was Golden Goose 2, then Golden Goose 3, then Golden Goose 4. And if you get in right away, you can stake your egg, and you could get 150,000% returns in Golden Goose 1. And it's just this ridiculous Ponzi. And then the next week you stake it for Golden Goose 2 and 3 and 4 and 5 and 6 and so on. And the Golden Goose tokens keep going to zero. I'm really underwater. This was not a great trade. So don't put your money in it. If you want to put your money in it and save me a little bit, I'm not recommending it, but it's a lot of fun.
I'm going to join the Ponzi called Goose.
Goose. I think it's Goose DeFi. I don't know. You could find it. There's like 400 million in TVL in value locked. So lots of people are also, being an idiot on this trade. Yeah. It's not just me.
Yeah. Oh, that's too funny. Well, Joshua, thanks so much for taking the time to be on this episode of Show Me the Crypto.
It's been a ton of fun.
Yeah, thanks for having me, guys. I really appreciate it.
Thank you for listening to Show Me the Crypto. Please make sure to subscribe as well as rate and review this podcast.